Hello and welcome. You're tuned into Market Fatafat with me, Ankita Saxena. Well, in the next 1 hour, we will take you through all the buzzers in trade. Why are they buzzing? What's the news flow? What's powering these stocks? And on the back of news flow and on the back of technicals as well. But let's quickly take a stock of how the markets are really panning out now. As I can see, we are mirroring the global markets. There's geopolitical tension that is weighing down the markets, and that is, having an effect on the Indian markets as well. And as I can see right now, Nifty is trading with cuts of almost 482 points. In fact, this is the single biggest session decline in almost 2 months. 45 out of 50 index stocks are trading in the red. Nifty Bank is also down with almost 890 points. Broader markets are also following suit and are trading with deep cuts. In fact, mid cap and small cap both, especially the mid cap, that is trading with cuts of almost 2% in trade today. Market breadth, of course, is tilted in the favor of declines, and sectorally also all the sectors are trading in the red now, in the negative territory. Realty index is really taking it on the chin. It is trading with cuts of almost 3.5% right now. Metal index, that was really, a bit of a beacon of a hope in the morning, which was trading in the positive territory in the morning, has given up all those gains and is actually slipped into the red. So all sectoral sectors are trading in the red right now. Also, we see, because we saw a rise in the crude prices due to the escalated tensions, that is really weighing down a lot of the stocks like, the paint stocks like Asian Paints, Berger Paints. The tire stocks are also facing pressure because of that. So that's where the pressure is coming from. If you look at the top Nifty gainers, however, we see JSW Steel, Sun Pharma, Dr. Reddy, that is trading with the minor gains but holding on to the positive territory there. And of course, on the losing side, we have BPCL, Asian Paints, like I mentioned, L&T, Shriram Finance, Bajaj Finserv, all trading with cuts of more than 3% right now. So that's how largely the market is right now panning out. But we have started with the festive season. We have started with Navaratri, and how can we not get you stocks that are, that are meant for this festive season, will add perhaps cheer to your festive season. And for that, we are joined by Naresh Mirani and also Kunal Botra, who are going to tell you all the picks for this Navaratri season. Coming to you, Kunal, first, tell us what are you picking out for us this Navaratri?
So yeah, I think wishing first of all the viewers as well as to all of you guys happy Navaratri. Now, in the sense, today's stock which I would want to recommend is ICICI Bank, and one of the prime reasons for that is the classic outperformance the stock had shown over the last 6-9 months, 1 year, 2 years with respect to many of the other peers. Now, the good part about the stock is that so far it's corrected by almost 5-6% in this last 1 week, 10 days, when the markets have gone through a mild correction, and that's gotten the risk reward to a much more better perspective for ICICI Bank. The stock on a technical basis is holding on to its 50-day moving average, which on historical terms has also acted as a good support for ICICI Bank. So I think on the back of this, my belief, and looking at the sturdiness of the stock, the kind of stature the stock holds in terms of a long-term portfolio, the wealth creation the stock has made over the last 5, 10, 15 years, I would probably believe that ICICI Bank should be a stock which could be a part of one's core portfolio also. So short-term wise, would look out for 1350 as a target, and stop loss could be kept at 1200.
All right, ICICI Bank is the pick for Kunal. But coming to you, Naresh, now tell us which stock is on your radar?
In bet on BPCL. The stock over the long term, if you look at it, the stock has been a terrible return in terms of the stock topping out at 270, 280 back in 2017. Then in 2019, and then again in 2023, you could come back only to those prices, broke out above those levels, went up to 330, 340 levels, then again consolidated. In the current move, it has made a top around 370. And now we are setting up a longer term uptrend, wherein after 6-8 years, the stock has given a big breakout. At the same time, if you look at it, the crude prices have been pretty stable. There, it looks like volatility that it has moved up from 67 odd levels to 74, but it was at 74 a month back as well. So overall, till the time it stays above below 80, 85 crude, that is positive for the stock on a structural basis. And overall, the trend looks very interesting, a 6-8 year breakout. So a contrarian bet today, the stock has given a dip also, giving a good entry point. Would give a stop loss below 335, have a target price of 400 to 440.
All right, ICICI Bank and BPCL are the picks for Kunal and Naresh. But thank you so much for taking the time out and joining us for your festive season pick. But with that, we have kickstarted the festive season. So let's get an overall outlook on how the consumption space is really looking like this year. We caught up with Pushpa Bekta, who's the Executive Director of DLF Retail, Luxury and Shopping Malls. Let's go across and take stock of how the festive season is panning out.
The season this time seems promising. It's a long season, we are actually getting in Diwali and then the winter. There's a good gap between the two, which is always good for retail because then we get good sales pre-Diwali, the entire October, and then winter sets in post-Diwali. This time there is a talk of early winter too. So all in all, I would say it's a good, positive sentiment from the retail community and the mall space. Another aspect is also the fact that, the wedding this time is going to be a very, very long season of wedding. That should also aid to consumption.
All right, it's a positive word coming in on the consumption this festive season. But it is now time to get started with all the Fatafat stocks, the buzzers in trade. And for that, we are joined by Ashish Kyal, who's the founder and CEO of Wave Strategy Advisors on the technicals. And from our research team, we are joined by Jina and Gaurav. Hi, gentlemen. Thank you so much for joining us today. And with that, let's get started with all the stocks that are in focus today. Like first up from the consumption pack is Dabur. Now, shares of this FMCG major, in fact, took a knock of 7.8% almost, following the company's Q2 update, which indicated a mid-single-digit decline in the consolidated revenue for the quarter. However, the international business is expected to register double-digit constant currency growth in the top line. And as a result of the lower primary sales, Dabur's profitability is expected to be impacted during the quarter, with the operating margin projected to decline into the mid to high teens due to deleverage and continued investment in its brand. But we also had a few brokerage notes that came out on Dabur. In fact, Morgan Stanley is maintaining an equal weight with a target price of 772 rupees. We feel that the Q2 sales have declined in mid-single digits versus what the management was expecting in terms of growth rate. Weakness has been led by correction in the distribution inventory in general trade channel. Heavy rains and floods have impacted out-of-home consumption, and consumer offtake and beverage segment has been impacted. Q2 EBITDA is expected to decline in the mid to high teens due to operating deleverage, and that's the word coming in from Morgan Stanley. But also Investec is maintaining a hole in the counter with a target price of 368 rupees. So that's the word coming in from these two brokerages on Dabur. But we'll move on to another consumer name, which is Tata Consumer. Ashish, coming to you. Tell us, what are you seeing on the charts for Tata Consumers? A good word for at least the festive season. That's what's coming in for the consumer pack. But what are you seeing on the charts for this one? This hasn't really moved much in the last 6 months. In fact, it is in the consolidation mode in the last 1 month. So tell us, what are you seeing on the charts?
Tata Consumer has been consolidating. We can see some kind of a downfall in today's session. Some kind of a profit booking from the upper levels is what we can witness. But I think this can be a good accumulation range. We can overall see a rounding cup and handle pattern. And currently the handle is under formation. So the support for the stock is around 1120 levels. And any break above 1180 will initiate, one can initiate long positions for the target of 1260. So we are optimistic for this stock.
All right, optimistic for Tata Consumers. But coming to you, Janay, Coforge is the name that you picked out for us. Brokerage note that is giving a buy on this counter. Tell us, what is the note saying?
Well, yes, Coforge is in focus as we have a note by Philips Securities. They are doing a buy rating with a target price of 79.80. Now, what they believe is that they are expecting an organic CC revenue growth of 3% quarter-on-quarter basis. And if you include the kidney technologies, then they are expecting a growth of 22.4% on quarter-on-quarter basis. They're also expecting this growth to be mainly led by the bounce back of BFS vertical, along with the decent growth in travel and insurance verticals. The margins are expected to decrease although by 1.2%. This is mainly due to the wage hikes. And they've also highlighted to watch out some of the deal ramp-up visibility, kidney integration update, BFSI vertical outlook, deal win with TCV, and the overall attrition for the company. Currently, if you look at the stock, it was trading in green earlier today, but right now currently losing 1.2%.
All right, moving on. Gaurav, you have picked out Angel One for us. Tell us, what is the news flow here?
Well, yes. Angel One is buzzing in trade today, and the stock is up almost by 5%. And the reason being that when we talk about the brokerage charges, now the company has came on Tuesday that they have actually levied a flat 20 rupees charges. They have actually increased the brokerage charges, and on back of this, now Investec has also maintained buy rating but increased the target price for the company to 3,000 rupees per share. What Investec is saying is that they have actually upgraded FY26 PAT almost by 7%. They have actually upgraded the estimates for PAT. Apart from that, what they say is that Angel One has actually increased prices to reduce the impact of the regulatory charges, because what they are expecting is that they are expecting some kind of 25% of the decline in F&O regulations. Apart from that, what they say is that the company also has more levers to increase the revenue. As a result, we saw some uptick in discounter. So definitely watching out on this Angel One on the back of the Investec's strong note as well as the recent price hike that the company has taken.
Alright, that's Angel One for you. But moving on, we have the NSE MD and CEO also on SEBI's F&O framework, the tighter curbs that are likely to hit the F&O volumes. Let's go across and take a look at what he had to say about that.
We have with us Mr. Ashish Kumar Chauhan, Managing Director and CEO of NSE. Welcome to ET Now, sir. SEBI came out with the measures this week to curb the frenzy of trading that is happening in futures and options. Do you think that would help protect investors, especially the retail investors, better in today's markets, which are touching new highs? And will this also help improve risk management in the overall system?
Broadly speaking, SEBI's measures have been taken to ensure that the small investors stay away from the markets, and rightfully so. And that's where I think broadly it should have desired effect going forward. And naturally, the market is all time. India is a very important country in terms of investments today across the world. India is now becoming the fourth largest market. That's where I think.
All right, moving on, coming to you, Ashish. Then on the charts, you have also picked out Angel One for us. Angel One, though, it is doing pretty well in the trade today, of course, on the back of that brokerage note, and they have increased their brokerage charges. But tell us, what are you seeing on the charts for this one? Because this counter has just started moving in the last few weeks. As I can see, it's given an uptick of 9 or 10 odd %. But in the last few weeks, this counter has really started picking up. Tell us, what is the upside you're seeing for Angel One?
If you look at Angel One, it has shown a very strong rise in today's session, and along with a good volumes pickup. So overall, the stock looks to be positive. We can expect a breakout on the stock to happen, and it can take price towards 3,200 levels on the upside. And despite of the sell-off that we are seeing in the market, this stock has managed to outperform. So the overall tone for Angel One is positive. For 3,200 as the target, and one can maintain a stop loss around 2,450 levels.
All right, with that, it's time for a quick breather, but don't go anywhere. After the break, we are getting you some more buzzers in trade. Welcome back. You're tuned into Market Fatafat with me, Ankita Saxena, where we are taking you through all the stocks that are buzzing away in trade. So let's resume then. JSW Energy is the counter that is in focus today, because JSW Neo Energy Limited, has received a letter of intent from the Maharashtra State Electricity Distribution Company for the procurement of 1,500 megawatt to 12,000 megawatt of pumped hydro energy storage. And on the back of this, the stock is in focus today, even though it has given up all the morning gains, like mirroring the markets totally, and it is trading with declines. In fact, it is trading at the day's lowest point right now, trading with cuts of 2% as of now. But coming to you, Ashish, you have picked out Colgate-Palmolive for us. Tell us, what are you seeing on the charts for this counter? In fact, in the last 1 month, you're seeing a consolidation coming in on this stock. Tell us, do you see this, do you see a breakout in this counter?
Colgate-Palmolive, from the FMCG space, we can clearly see a very strong breakout has happened, and the entire move on the upside looks like a secular bull trend. So one can create long positions here. We can see that the stock is moving independent to the broader market sell-off, and that's a very positive sign. The long positions can be created in Colgate-Palmolive. Any dips can be used as buying opportunity, as long as on the downside, the support of the stock is going to be around 3,690, and we can expect the stocks to cross around 4,300 levels.
All right, that is Colgate Palmolive for you. But moving on, Jinai, you picked out Eicher Motors and Hero Motors on the basis of the auto sales numbers that have come in. Tell us, what are the numbers looking like?
Well, yes, if you look at the overall auto sales numbers, majority of the numbers were better than estimates. If we talk about two-wheelers, the sales were flat, better than estimates. And if we talk about PV sales, then the sales were under pressure for third straight months. Now let's talk about Hero Moto. The sales overall were above estimates. If you look at the numbers, it was 6.4 lakh units versus 5.3 lakh units, improving about 19% year-on-year basis. And the company has also commented that the company has a strong pipeline of bookings and is experiencing an increased customer footfalls leading up to the festival season. Moving on, if we talk about Eicher Motors, then Eicher Motors VECV sales were again above estimates, 7,609 units versus 7,200 units, up about 6% year-on-year basis. So both of these counters will remain in focus.
All right, moving on, Gaurav, you picked out the real estate sector for us. In fact, the real estate sector is the sector that is really taking it on the chin today in today's trading session. In fact, it's trading with cuts of almost 3.5 to 4%. Tell us, why have you picked out these counters and what's the news flow?
Yes. Real estate sector is definitely under pressure, and the reason why is that Investec has actually highlighted a very important point for real estate sector now. What they're saying is that the demand is cooling off in the first 2 months of Q2 FY25. This is a trend what they are seeing. They are also saying that there is uncertainty building around the capital gains. We are already seeing that the slowdown is happening in pre-sales because of the divergence that they are noticing between newly launched units and actually absorbed units, and this divergence is ranging between 15 to 20%, and this is from the key markets like Chennai, Bengaluru, Mumbai, Mumbai MMR regions. Apart from that, what they have said is that when we talk about YY growth also, we have got macrotech developers, Oberoi Realty, who has actually shown some kind of negative growth on a YY basis, while Godrej Properties and Keystone were the players who have reported positive growth. On the back of this, they have also actually upgraded the Godrej Properties to buy and also upgraded the target price to 4,200 rupees, because what they say is that this is actually an established brand. They say that we may see strong growth and trends which will come up, but overall because of the rising pressure building up on the entire segment, we are seeing that Godrej Properties is also down almost by 4%, as well as the entire realty sector is down. So definitely watching out on all these counters on the back of the recent trends that have been highlighted by Investec, as well as the note that is given by Investec on Godrej Properties.
All right, that's the note coming in on the realty sector. But all cargo logistics, all cargo terminals, I beg your pardon, is also in focus today. In fact, it is in focus today on the back of the approved acquisition of 7.6% of the Haryana Orbital Rail Corp held by All Cargo Logistics, which is a promoter group, for around 115 crore rupees. Plus, they have also approved the borrowing of rupee term loan of 140 crore rupees from Asim Infra. And on the back of that, All Cargo Terminal is in focus today. It is trading with cuts of 1.8% as of now. But moving on from that to Petronet LNG, Ashish, tell us, Petronet LNG, what are you seeing on the charts for this counter?
Petronet LNG showed a very strong breakout. It managed to move back about 10 and 20 DMA with huge volume. So the overall trend for Petronet LNG is positive. We can expect the stock to move towards the level of 390, which is near the earlier peak. And on the downside, one can maintain a stop loss for the stock around 345 levels.
All right, that's Petronet LNG on the charts, but good festive season is what we're expecting. But with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.